Hello viewers, welcome to my channel. I'm Hasham. So far 7 problems I have completed on capital gain. In this video 3 more problems, 8, 9, 10 I'm going to finish. So you have seen already every problem almost 70-80% points are same. Only 20-30% points, 1 or 2 points are different. So you have to focus on the new points in every problem. So always make a note. Maintain notes of all the provisions which I'm explaining, then only you can be able to remember. Otherwise, so many provisions are there in Income Tax Act, you will forget it. So always maintain notes. Keep a notebook, calculator ready while watching the video. So keep a rhythm on watching all the videos, one video with another video. If you join in between, you may not be able to understand. So if you have not watched the earlier videos, I suggest you go to the playlist of my channel, select the subject income tax for the assessment year 22-23, watch the videos of capital gain, be perfect on the provisions, and then only you can enjoy learning the provisions, learning how to find the capital gain. So before starting the 8th problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. If you don't have the problems, you cannot understand. And take the screenshot of the points of these 3 problems, then I'll explain every point in detail. Now, see the 8th problem. Problem number 8. Mr. Vijay Raj purchased gold for rupees 5 lakh on 6th September 1989 and its fair market value on 1/4/2001 is 9,15,000. First of all, if any asset is purchased before 1/4/2001, the assessee can choose higher of the following two as the cost of acquisition: actual cost or fair market value. Here in our problem, he has purchased for 5 lakh. But the fair market value was 9,50,000. So we choose 9,50,000 as the cost of acquisition. On 16th Jan 2005, he has ordered to make an ornament of the gold by spending 2,26,000. Cost inflation index 113. This is the improvement. Cost of improvement. So we have cost of acquisition and cost of improvement. On 14th December 2013, he offered to sell this ornament to a businessman and received 1,50,000 as advance. On the agreed date of sale, the businessman negatived the sale transaction and accordingly the deposit was forfeited. Advance money forfeited. In the previous problem also already we have discussed this point. If the advance was forfeited before 1/4/2014, then that advance should be deducted from the cost of acquisition. If the advance money is forfeited after 1/4/2014, that advance is taxable under income from other sources. Now here, the advance was forfeited on 14th December 2013. That means before 1/4/2014. So this advance of 1,50,000 will be deducted from the cost of acquisition. Now, during the previous year 21-22, the ornament is sold for 28,25,000 and the selling expenses are 25,000. Calculate capital gain and tax liability. If the age of the assessee on the date of sale is 82 years, that means super senior citizen. 80 and above, the assessee will be called super senior citizen, and the basic exemption limit of super senior citizen is 5 lakh. And the income from other heads are 2,25,000. That's all. So we will begin like this. Mr. Vijay Raj, computation of LTCG for the assessment year 22-23. Consideration received 28,25,000. This is the amount at which the asset was sold. Less selling expense are 25,000 given in the problem. Deduct 28 lakh net consideration. Now, the most important part is regarding cost of acquisition. So here in working note, I'm going to show in working note. And in examination, it's a must that you have to show all these workings. If you simply calculate and find even the correct answer also, you may not get the full marks until and unless you write the working notes. So the asset was purchased before 1/4/2001. So the SSC can choose higher of the following two as the cost of acquisition. Actual cost 5 lakh and the fair market value on 1/4/2001 is 9,50,000. Whichever is higher. So 9,50,000 is the cost of acquisition. Apart from that, advance money was forfeited before 1/4/2014. So that advance will be deducted from the cost of acquisition. So here the advance money was forfeited before 1/4/2014, so it will be deducted. 9,50,000 minus 1,50,000, 8 lakh rupees is the cost of acquisition. Now we need the indexed cost of acquisition. So 8 lakh into previous year index is 317. Already every problem we are writing. When the asset is sold during the current previous year, the current previous year is 2021-22 and 21-22 index number is 317 divided by, if any asset is purchased before 1/4/2001, then the index number should be taken as 100. Already every problem, most of the problem we have done. So 317 by 100, 225,36. So 25,36,000 is the indexed cost of acquisition. So here I have written indexed cost of acquisition 25,36,000. Now indexed cost of improvement. So when he has made the improvement, he has ordered to make the improvement ornament of the gold by spending 2,26,000, cost inflation index 113. So indexed cost of improvement 2,26,000 into 317 by 113. Index number at the time of making improvement is 113 given in the problem. So it comes to 6,34,000 is the indexed cost of improvement. Now I am putting it in bracket. Bracket denotes subtraction, minus. So 28 lakh minus 23,36,000 minus 6,34,000, you will get minus 3,70,000. So there is no capital gain, there is capital loss. Long-term capital loss 3,70,000. Now, according to the provisions of Income Tax Act, long-term capital loss cannot be set off from any other income. This capital loss will be carried forward to the next year. And in the next year, if there is capital gain, long-term capital gain, then only this loss can be set off from long-term capital gain. In simple words, long-term capital loss can be set off only from long-term capital gain. It can be carried forward to the next year. That's it. Now, calculation of tax liability. There is no tax, there is no capital gain. Income under other heads, 2,25,000. The SSC is a super senior citizen because in the problem it is given 82 years. For 82 years super senior citizen, the basic exemption limit is 5 lakh. Up to 5 lakh rupees, no tax. So here 2,25,000. There is no tax. No tax liability for this SSC. That's it. Now, problem number 9. Mr. Madan Mohan is an employee of a limited company and gets annual salary of 12,50,000. So income from salary 12,50,000. He owns a house in Jamshedpur which is used for residence. The house was purchased in February 2006 for 3,51,000. During the year 2008-2009, he constructed one more floor by spending 95,900. So there is cost of acquisition and cost of improvement. On 9th May 2021, he entered into a contract to sell the house and received 1,50,000 as advance. Now, as the sale consideration is not completed, rupees 1 lakh is forfeited through a mediator. Now, advance money received for sale transaction, but the sale transaction was not completed, advance money was forfeited. So out of 1,50,000 received advance, 1 lakh rupees is forfeited. Now, Income Tax Act says, if the advance money is forfeited after 1/4/2014, it is treated as income from other sources. So in this problem, the advance money forfeited of 1 lakh rupees is taxable under income from other sources, not under income from capital gain. Now on 17th August 2021, he sold the property for 42 lakh, selling expenses 2%. and his income from other sources are 9,200. Calculate capital gain and tax liability for the assessment year 22-23. Our current assessment year is 22-23. CII, Cost Inflation Index, 2005-2006 is 117, 2008-2009 137, and 21-22 317. All the index numbers are given. That's it. Now, step by step, I'll explain. Mr. Madan Mohan, I'm not writing the complete heading. Computation of long-term capital gain for the assessment year 22-23, you should write. Then consideration received, 42 lakh given in the problem. The house was sold for 42 lakh, less selling expenses 2%. So 2% of 42 lakh, 84,000, deduct will get net consideration 41 lakh, 16,000. Now indexed cost of acquisition. Indexed cost of acquisition. The house was purchased in the year February 2006. The amount was 3,51,000. So 3,51,000 into 317 divided by 117. Because in last line CII is given for 2005-2006. 2005-2006 117. So divide. So it comes to 9,51,000. Put it in bracket because we have to subtract. Indexed cost of improvement. The improvement of 95,900 was done in 2008-2009. The index number for 2008-2009 is 137 given on the last line. So 95,900 into 317 by 137, 221,900. Again bracket because we have to subtract. So 41,16,000 minus 9,51,000 minus 2,21,900. You will get 29,43,100. This is the long-term capital gain, which is taxable at a flat rate of 20%. That's all. So advance money was forfeited after 1/4/2014, so it is taxable under the income from other sources. Income from salary is given 12,50,000. First line it is given. Then income from other heads are given 9,200 given in the last line. And advance money forfeited 1 lakh rupees, that is also taxable under income from other sources. So total normal income comes to 13,59,200. He is having two incomes, normal income and special income. This LTCG what he got is a special income which is taxed at a flat rate of 20%. Whereas normal income is taxed on slab basis. That's it. Now tax on normal income. We know already slabs are there. The first slab 2,50,000. Up to 2,50,000 income, no tax. Next slab 2,50,000, 1 to 5 lakh. The income is 2,50,000. On that 5% is the tax 12,500. Next slab goes from 5 lakh 1 to 10 lakh. So from 5 lakh 1 to 10 lakh, the income is 5 lakh rupees. The tax rate 20%, it comes to 1 lakh. Now over 10 lakh rupees, whatever balance is there, 30%. So total income is 13,59,200. Out of 13,59,200 minus 2,50,000 minus 2,50,000 minus 5 lakh. So totally 10 lakh rupees are deducted. So remaining 3,59,200, 30%, 107,760. The total tax is 220,260. 2,20,260 is the tax on normal income. Now you have to apply the tax on LTCG 20% flat. So 29,43,100 into 20%, 588,620. The total tax comes to 808,880. To this we add health and education cess 4%. It comes to 32,355. So finally the tax liability is 841,235. But according to the provisions, the tax should be rounded off to the nearest 10. The last digit, if 5 is there, make it 10. 35 will make it 40. So 8,41,240 is the tax liability rounded off. Finished. So every problem you must write the working notes. Next, 10th problem. On 14th July 1972, Sri Naidu, age 64 years, purchased a house property for 9,100. The actual cost of purchasing the property 9,100 in the year 1972, very long back. The following are the related particulars: year, amount, CII, cost inflation index. Construction of first floor in 1998-99. He purchased the house in 1972 for 9,100. Then made the improvement. First floor he has constructed in 1998-99, 75,000. Then construction of second floor in 2001-2002, 1 lakh. Then renovation of the house 2002-2003, 1,05,000. Last whitewash and painting 2007-2008. Remember, whitewash painting is a revenue expense. It is not a capital expenditure. So it should be ignored. In working note, you should write down whitewash painting is a revenue expenses, so it should be ignored while calculating capital gain. Fair market value of the property on 1/4/2001, 3 lakh. According to the provisions of IT Act, if any property is purchased before 1/4/2001, the assessee can choose higher of the following two: actual cost or FMV. So here actual cost was only 9,100, but the fair market value on 1/4/2001 is 3 lakh. So he can choose the higher 3 lakh. During the previous year 21-22, the property was sold for 48 lakh. Selling expenses 1.5% and advance received 70,000. See here advance received, it is not given forfeited. So that means this advance is received as a part of the total consideration. So we should not consider this 70,000. It is the part of the total consideration 48 lakh, right? So advance money we should ignore. Compute income from capital gain and tax liability if income from other heads is nil. No income under other heads. So here you should be careful regarding when the improvements were made. Consideration received 48 lakh given in the problem. Selling expenses 1.5% of 48 lakh. It comes to 72,000 deduct. Then 47 lakh 28,000 is the net consideration. Now be careful regarding cost of acquisition. Indexed cost of acquisition. Now in working note you can see. Advance received. After receiving the advance, sale transaction is completed. Hence it becomes part of the total consideration. While computing capital gain, this part should be ignored. The advance money received is the part of the total consideration. It is not forfeited advance. Advance forfeited, that's a different thing. When it will be forfeited? When the sale transaction was not completed. Here sale transaction is completed. So advance ignore. Calculating cost of acquisition. The asset is purchased before 1/4/2001, so the cost of acquisition is higher of the following two. Actual cost 9,100 and FMV on 1/4/2001 is 3 lakh. Now cost of acquisition 3 lakh. Indexed cost of acquisition 3 lakh into 317 by 100. It comes to 9,51,000. So here I have taken indexed cost of acquisition, working note 9,51,000 in bracket. Bracket denotes subtraction. Now be careful regarding the improvements. The assessee has constructed first floor, then second floor, then renovation, then whitewash painting. So step by step we will understand. Indexed cost of acquisition. 98,99, 75,000 rupees was spent on constructing the first floor. Cost of improvement incurred before 1/4/2001 shall not be considered. First point. When the assessee has chosen FMV on 1/4/2001, then any capital expenditure incurred before 1/4/2001 should be ignored. So here he has constructed one building in 98-99, which is before 1/4/2001. So it should be ignored. So expenditure incurred on making first floor should be ignored because it was spent before 1/4/2001. Second, in 2001-2002. Second floor they have constructed in 2001-2002, incurring 1 lakh. So here indexed cost of acquisition 1 lakh into 317 by 100, 3,17,000. So here you can see indexed cost of acquisition 2001-2002, 3,17,000 in bracket denotes subtraction. Next 2002-2003, some renovation was made in 2002-2003, incurring 1,05,000. The index number for 2002-2003 is 105 given in the problem. So 1,05,000 into 317 by 105, 3,17,000. Here you can take 3,17,000. Now last one, 2007-2008, whitewashing and painting expense are revenue expenses, hence to be ignored. Finished. So we have taken, this is the cost of acquisition, these two are the cost of improvement. Now subtract all the three items, you will get 31,43,000 as the long-term capital gain, which is taxed at a flat rate of 20%. Now we have to compute the tax liability. So income under other heads is nil. In the problem it is given no other income. Income under other heads is nil. Whereas income from long-term capital gain 31,43,000. Basic exemption is allowed. The age of the SSC is how much? 64 years. Over 60 years, senior citizen. 80 and above, super senior citizen. Remember, below 60 years. Below 60 years, non-senior citizen. 60 and above, but below 80 is a super senior. 80 and above is a super senior. So non-senior, senior, super senior. So 60 and above but below 80 is a senior citizen whose basic exemption limit is 3 lakh. Non-senior 2 lakh 50. Senior 3 lakh. Super senior 5 lakh. This is the basic exemption limit. So here 64 years means senior citizen, basic exemption limit is 3 lakh. So here basic exemption limit 3 lakh, deduct 28,43,000 is the long-term capital gain. Now tax on LTCG at 20% of 28,43,000, 56,86,000. 56,86. No, sorry, 5,68,600. 5,68,600 is the tax on LTCG. To this we add health and education cess 4%. So 4% of that amount you will get 22,744. Add up 591,344. So round it off to the last 10. 44 can be rounded off to 40. If 45 or more than 45 is there, we can make it 50. But 45 less than 45, we ignore the last 4, then we'll make it 40. So 5,91,340 is the tax liability. So far 10 problems I have explained on capital gain, each and every point. If you are regularly watching all the videos, I expect that you got a good command on this topic of capital gain, and with confidence you can write in examination. My best wishes are always with you. Inshallah, we'll continue the next problem in the next video.